Good morning, guys, and listen, welcome to the show. Nice to have you here. Now, here's the first thing. It's June 7th. It's a Thursday. And first thing we're going to do, we're going to start the charts right here, and we're going to get on to the silver price. Now, the silver price this morning, she shot upwards. And she's, like I say, it could make it into this next range. Like, there's two ranges. The range is between like 1620 and 1670 roughly, and then the range between up to 1720 or 1740 is the second range. It could actually get up to that second range, like 1720. It could go back up into that range again. It's flirting with it right now. It's trying to, but it's still in the lower range. But it's in the high side of the lower range. Will it make it up into that next range? Now, I don't consider this to be the breakthrough, big breakthrough in silver. When that comes, you're going to know it, because you're going to see massive increases in the price of silver, like we saw with Bitcoin. When Bitcoin did what it did, when it ran all the way up to $20,000, we're going to see moves like that in silver. And it's coming. It's coming when the fear comes. And believe me, the fear is coming. And if you watch my show a little bit longer today, you're going to find out that the fear, the pain is coming. A big event is coming right around the horizon. So now let's move on to Bitcoin. And let's take a look at what Bitcoin's doing today. It's almost $7,700. It's trying to creep back up. I gave a price target before during the collapse even. Before the market gets down to 20,000, when the market's initially starting to fall, that Bitcoin, we'll see it rise. And there's going to be a little bit of a rush into Bitcoin when the market first starts to collapse. I believe that we'll see a little bit of a rush into Bitcoin, just a little bit. It could go as high as, say, 11,000 before Bitcoin falls. Bitcoin then is going to fall with the market. So then we're going to see a change. Bitcoin's going to fall, silver's going to go up. At the same point Bitcoin starts to fall, silver's going to start to go up. That's when the fear hits, when the real fear hits, the intense fear. See, there's a little bit of fear that comes when the market starts to fall, like down toward 20,000. Let's take a look at the market right now. It's up 110 points today, 25,256. Let's call this a calm before the storm. Now, I expect it to continue in this range it's been going in. It's getting up near the high side of its range, to tell you the truth. It meets resistance at around 26,000, and we're up over 25,000 now. And so it's hard to head up toward resistance. Now, let's take a look at oil. Oil's had a nice little drop down, a nice little price correction now, and now it's starting to stabilize in around 65 bucks. It's up 57 cents today. That's almost 1%. But I see a stabilized oil price in here around this price right now for the next little while, maybe the next couple weeks anyway. Bonds and rates. Bonds and rates, we've seen it's been going upwards. This morning it says unchanged on the 10-year. 10 years is the one I myopically focus on because most all debt is priced on the 10-year. And what we see is 97.5, almost 3. I expect it to stay in around 3 to about maybe slightly over 3, 3.05 maybe, until the end of this month. And then I think she's going to take off. After the end of this month is over, then I think she's going to take off and start heading towards 3.25%. Because that's when the Fed, it's all up to the Fed, see? That's when the Fed increases it by $10 billion at the end of this month. They're going to increase it from 30 billion to 40 billion. Now, cryptocurrency market capitalizations today. What we're looking at is a lot of numbers in the green today. We're looking at Bitcoin dominance of 37.9%. $346 billion market capital. Okay, so the top coins, we're looking at the top 4 coins are all up, but only marginally. Ripple's up the most of the top 4. Then EOS is down a little bit today at $13.88, and so is Litecoin. Litecoin is only down marginally, though. It's $121.52 for Litecoin. Litecoin's probably, I think, it's your best value in all the coins. Personally, that's my personal opinion on it. I think it's a better value than Bitcoin, even. It's just like silver's a better value than gold. Why Litecoin is such a good value and why it's such a great coin is going all the way back to the origins of these cryptocurrencies. Bitcoin was gold, and Litecoin was silver. And somehow I believe that the creators of all of this, behind the scenes, the real big power behind the scenes is probably behind all of this, is going to stick with Litecoin and Bitcoin. And they're going to fix Bitcoin. Eventually, they're going to fix it so that it's able to scale, what's called scale. And that means that it's going to be able to cover all the world's transactions in time. As computers scale, Bitcoin will scale. It'll scale to match the need, and so will Litecoin. Litecoin has already been proven itself to scale. It's already been implemented, different things to help speed Litecoin up. Bitcoin will be sped up as time goes on, things like the Lightning Network and so on. So now let's go on to bonds and rates today. Okay, we did bonds and rates. Let's move on to the U.S. dollar index. It's shooting up right now while we speak. Let's go back and take a look at silver price. Silver price should be starting to go down a little bit then if the dollar's shooting up. Yeah, it's down just a little bit. So it's following. You can see when the dollar goes up, silver goes down, and vice versa. What about the ECB right now? What's going on? Now, this has an awful lot to do with the coordinated effort that the central banks are making right now. The central banks are in a coordinated effort to basically, they were in a stimulating position there for years after 2008. They were stimulating the economy and they were building up this giant credit expansion. Right now, they're withdrawing the liquidity away from the system. And so it's obvious to me what's going to happen. And very soon, they can't withdraw this liquidity away. This is like a drug user trying to stop heroin. What's going to happen to him? Well, he's going to go through withdrawal, and it's not going to be pretty. And that's what's going to happen very soon because these central banks are withdrawing liquidity from the system. It says here, the ECB is basically giving the finger to Italy. Is Draghi risking everything to teach Rome a lesson? I don't think so. I think really what it's got to do with is a coordinated effort by the central banks. And Italy's just getting caught in the middle of all this. Everything's going to fold in on itself very soon because they're withdrawing liquidity out of the system. It says perhaps the most perplexing market move event of the past 48 hours was the 1-2 punch of a Tuesday Bloomberg report that next Thursday's ECB meeting is live and that policymakers anticipate at long last holding a discussion that could conclude with a public announcement on when they intend to cease asset purchases. So the central bank, the European Central Bank is slowing down and cutting off their asset purchases. Now, the American Central Bank is already gone in the opposite direction. They've cut off their asset purchases a long time ago, and they're quite literally selling, and so this is a move in the exact same direction by the European Central Bank. All of this is coordinated. It's all coming down to this fall, when the Fed will be up to $50 billion a month extracting liquidity from the system, and the European Central Bank now was not going to be pumping any more money into the system. Can we say deflation in Europe? I mean, Europe is just barely on the inflation side right now, and with these giant asset purchases of quantitative easing that the European Central Bank is doing. If they stop that, then Europe is going to start to slide toward deflation at exactly the same time that the central bank in America is withdrawing liquidity from the system. This is a recipe for disaster. They're not going to be able to get away with this. It's all going to fold in on them this fall. It says so. They intend to cease asset purchases. And they intend to take the heroin away from the system, basically. And the system's going to go through withdrawal. It says, coupled with a slew of ECB members overnight coming out with unexpected hawkish comments. See, you know why they're hawkish? Because right now the Federal Reserve is seemingly getting away with what they're doing. And so these European Central Bank members are saying to themselves, hey, you know what? If the Fed can get away with it, why can't we? And they're all doing this coordinated effort. And they're seemingly getting away with it until the system snaps. And the system is going to snap, and it's going to snap. When it snaps, it's going to snap awfully fast. Be prepared for it, folks. It's going to. That's why I've called it all along a deflationary spike event. It's going to be like, bang! It's going to hit just like that, unexpectedly. Of these, the ECB's otherwise dovish Peter Praet said, inflation expectations are increasingly consistent with the ECB's aim, and added that markets are expecting an end of quantitative easing at the end of 2018. This is an observation, an input that is up for discussion, and that is clear that the next week's Governing Council will have to make this assessment. The assessment on whether the progress so far has been sufficient to warrant a gradual unwinding of our next net asset purchases. See, so they're talking about the same thing. They want to unwind. The European Central Bank wants to unwind their asset purchases. Basically, that's a program, the same thing as the American Bank is already into. The Federal Reserve is already doing this. They're already unwinding their balance sheet. European Central Bank is actually considering doing exactly the same thing. It says other ECB hawks, such as Hansen, Wildman, and Knott, doubled down on the central bank's sudden quantitative easing ending jawboning pivot, saying that the ECB could lift rates before mid-2019 due to moderately rising inflation. That market expectation of an end of quantitative easing by the end of 2018 is plausible, and that the ECB should wind down quantitative easing as soon as possible. ASAP, as soon as possible. The market response was instantaneously, and it pushed German and Italian yields sharply higher. See that? So what we're looking at is bond yields going higher. They're going to continue to go higher here in the United States as long as they continue with this foolishness. And why I call it foolishness is because in the end it's going to cause a reversal. It's going to cause a sudden snap in all of the markets. It's going to cause a sudden crash, and it's going to bring back deflation. And when that happens, then they're going to all turn into doves everywhere. All these central banks are going to have to turn dovish in a big way, and that's going to bring about the destruction of the fiat currencies. Because the fiat currencies right now people have been slowly losing faith in the fiat currencies, and this faith erosion is the reason why cryptocurrencies have done as well as they have over the past so many months. Thank you guys for listening to this market report, and we'll catch you in the very next market report coming right up soon. Bye-bye.